Hey guys, Lance Martin, Coldwell Banker, Town and Country. Here we are, our December 2021 real estate market snapshot with the ongoing 2021 real estate market forecast. In January, just 30 days from now, we're going to change the number and we'll start talking about our 2022 forecast. So here we are. This is, I think, our 5th month of doing this. So I'm going to assume I'm building an audience, and those that are watching this have a little bit of interest and have kind of been following along. So if not, you're going to need to get up to speed. So by the way, we've got our date kind of set. We're looking at March of 3 months from now, March of 2022. We're still planning on doing a live event, assuming we don't have some COVID issues. So stay tuned for that. It's coming up. All right, we're still sticking to Southern California. Nothing other than that. LA, Riverside, San Bernardino counties for our definition of what Southern California is. We'll talk a little bit about interest rates. Yes, they've gone up. And we'll talk a little bit about the eviction moratorium. It'll be very short and very sweet, but we are going to do it in a separate video as kind of been our trend. So let's go ahead and jump right in. Median price, 3 counties combined. So the chart's starting to come together. This is very unusual though, guys, very, very unusual. So this is Los Angeles, Riverside, San Bernardino County, median price, 24 months. Again, I've been focusing the last couple of months on this little peak where values ever so slightly pulled back, then they flattened off, and then they actually went up just a smidge last month for the 3 counties combined. But we'll talk a little bit more because all these charts tend to look the same. Same 3 counties. 12-month isolation, and again, I just want you to kind of focus on the hump, but the trend is very, very positive on price-wise. Normally, we start to see a little, well, this is not a bad chart for it. I'll show you another one here in a minute. But, so what does this mean for the 3 counties? Median price, $629,000. 12-month, 16.6. So year over year, 16.6% increase in the 3 counties combined. A year ago, that 629 was 540. 2 years ago, it was 475. The 16.6 is a 12-month appreciation, 32.6% appreciation in the 24-month window, continuing this just phenomenal run in the 3 counties combined. This is our supply and demand chart. Again, dramatic drop in inventory. We complained about inventory 2 years ago. We complained about inventory a year ago. Well, we're continuing to complain about inventory. So those are basically active listings that were on the market for the month of November. This is our first week of December snapshot, so we're looking back at November. But that's our 12-month. The pendings, which is the blue chart, are still up. So as has been the trend for the last several months, we are selling more houses on fewer standing inventory. What's the 12-month isolation for the 3 counties look like? Again, still a pretty pronounced drop. It's not quite as a drop of from here because obviously we're starting off at a lower number, but still, we did our little trend. We peaked in, I think that's July, maybe August, September, October, yeah, August, we peaked inventory-wise, and now we are continuing our slide, which we will normally see this continue. If you go back to months prior, this year it looks like it started to jump back up in January, and a year ago it started to jump back up in, looks like March, okay? So we're probably gonna see less standing inventory in December and January if trends continue. So that red bar is gonna continue to get smaller, and we're all gonna continue to complain about there's not enough houses for sale. So what does this mean for the 3 counties combined? 22,600 homes for sale. That's 14.8% fewer homes than a year ago, 32%, 31.7% fewer than 2 years ago. So that's where we're just kind of complaining and mumbling and grumbling about it. However, the pendings are up. Actually, I didn't even talk about that on the prior charts. We'll talk about it when we isolate the counties. 8,900 houses in escrow in the month of November. That's an 11% increase year over year. So let's put that in context. Last November, COVID November, we had a great November. Okay, it was unlike anything. It didn't feel like a 4th quarter. We had a great October, November, December, and things were wonderful. Well, guess what? We had an even better November in 2021 than we had in 2020. So normally, if you guys have been hanging around me and listening to me for years, you know I hate the 4th quarter. Okay, I hate the 4th quarter because generally fewer people sell, fewer people buy. Things just get really slow. Not that we don't sell houses, but It just as a percentage of our year, the fourth quarter is normally the worst. So that was not the case last year. That is certainly not the case this year. But to maybe even put it in a little better perspective, 2 years ago, pre-COVID, this was COVID last year. This is November of 2020, November of 2019, 32% increase in pending home sales. Those are buyers and sellers matching up, accepting offers, and going into escrow. 32% more than 2 years ago. 2 years ago was one of those fourth quarters where I said, here we are. I just can't wait for the fourth quarter to get over. It's just a bummer. We need to get past it. Well, we kind of did that last year, and then this year again, we're just killing it from a standpoint of putting buyers and sellers together. However, if you happen to be one of those buyers, you're attributing to the price gains, and you're contributing to your own frustration because there's just so difficult to land you on a property. Okay, let's isolate the 3 counties. This is LA. I'm going to continue, not that I'm talking slow already. I'm going to continue to talk a little faster. So it's LA County all by itself, okay? So again, the trend is nice. We had this peak. This is actually, I guess this is June. It's flattened off a little bit, and now here we are in November, but these numbers are still pretty attractive. And again, this is our 12-month isolation, and it still shows a price trend pretty significantly on the upside. What does that look like? LA County, $760,000 median price. By the way, I'm throwing everything in a bucket. This includes a little itty bitty condo and a little mini McMansion, or frankly, for that matter, a full-blown McMansion. So $760,000. What does that mean? That's 13.4% higher than last year. What was last year? $670,000. 2 years ago, LA County, $595,000, 27%. From 2 years ago, 13% from the last 12 months. Pretty phenomenal numbers. Supply and demand chart for LA County. Again, very similar stuff. Dramatic drops in inventory. Pendings are high. This is our 12-month chart. Again, we're starting to see that drop off. It's not going to change, guys. We're going to continue to see lower inventory rates for the next couple of months. Now, I made a bet and I lost it. I kind of knew I was going to lose, but I made a bet with Misty Myers with Lipa Realty Group at Coldwell Banker Town and Country. Bet her $1. Every time I bet her $1, I lose. But anyway, I thought, because our inventory at Coldwell Banker Town and Country seems like it's picked up. We've had a crazy November with listings. I kind of got ahead of myself, and I let my own personal experience at what we're seeing at our offices. So, well, geez, maybe what we're seeing is trending with what the marketplace is in. So I bet Misty $1 that it's possible inventory was going to go up in November. That was a bad bet on my part. Inventory went down. And if I would have pulled back a little bit, which is kind of the reason I do this, you guys got to look at the data. Don't let your own personal stuff kind of dictate where you think the market's going, because you'll probably be disappointed. Because our personal inventory within our 4 offices is actually up in November. So I guess we outperformed the market from a listing perspective, but generally speaking, the inventory is still down. And there's a couple exceptions. We'll talk about that. And we'll talk about what the blue pendings are. That's 8.6% increase. So what's LA County all by itself look like? 12,700 houses for sale last month. That's 22% fewer homes than 12 months ago. 22% fewer homes than 12 months ago, and 30% fewer homes than 2 years ago. Very painful if you're in the market to buy. 4,400 people did go into escrow this past month. That's 8% more than last year, and 25% more open escrows in LA County than 2 years ago. So this is my second or third month. I'm saying the same thing, so I'm going to say it again. We sold 25% more homes last month than we did 2 years ago on 30% less inventory. 30% less inventory, 25% more sales. What does that translate to? It translates into higher prices. Okay, median price, Riverside County, all by itself. So charts are starting to look the same again. Trend is nice. Again, we kind of had that peak. You don't quite see as much of a little pullback over the last couple of months. And actually, what you ended up seeing in Riverside County is a high price for the last 2 years. We'll talk about what that price is in a minute. So again, very, very aggressive chart for the 12-month appreciation. Even though we've got these charts that are peaking over here, we're higher. We're higher in November 2021 than we were in whatever these months are. Looks like June, July, even though we flattened and pulled back a little bit in August and September. But back in November, here we are again. And what is that number? $545,000 median price for Riverside County, up 20% year over year. A year, that's 20% of the 455. 2 years ago, 394, 38% appreciation in 2 years. You kind of hear me and others talking, oh my gosh, we're at a 20% annual appreciation. Well, that's about a 20% annual appreciation for 2 years running. 40%. That's a heck of a number. So what's the supply and demand numbers look for Riverside? Again, similar charts. Again, I do want to point out that how dramatic the inventory dropped last year. So this is last September, October, November, December. It's really dramatic pullback in inventory. I have a feeling we're probably going to see something very similar to this. By the way, that's not unusual, guys. That is not unusual. It's not a COVID thing. That's just what we've been doing for the 30 years I've been tracking this, or at least for the 20 years I've been pulling these charts. We always see that pullback in inventory. The challenge is we never quite are building back up to these higher levels. And we complained back here, we didn't like this. And now we give our right arm if we could get back up to an inventory of that level. But the pendings, again, are just off the chart. Here's the 12-month chart. We'll get away from that. So what does it mean? 5,300 homes for sale. That's actually 3% down, so not as bad. 3% down year over year, but 32% down for over the last 2 years. Again, I'm sorry, buyers. It is what it is. It's rough. Put 2,500 homes in escrow. That's 12.8% more than a year ago. So again, as great as last November was, well, this year was 12.8% better from a standpoint of landing buyers and sellers together. And 41% more sales than 2 years ago. 41% more sales in Riverside County in the month of November 2021 than 2 years ago on 32.8% fewer homes for sale. It is crazy. I just can't emphasize it enough. And I know these numbers can just get crazy and confusing, which I try to overemphasize them. But 42% or 41% more sales on 32.8% fewer homes. Crazy. Again, that's over 24 months. Just nuts. Okay, median price in San Bernardino. Again, the charts tend to look the same. You still got that same little bubble. That's your 24-month chart. Here's your 12-month chart. Again, that same. You see that peak. We've definitely discovered we had our price peak last year right in the midsummer, right around July, give or take a month, depending upon what market you're looking at. So median price San Bernardino, $490. That's 16.7% higher than a year ago. What was it a year ago? $420. What was it 2 years ago? $355, 38%. Some of you guys know I sold some hedge fund properties for one of our clients about 2 years ago. Let's just, for argument's sake, say these guys know what they're doing. They have economists, they have forecasters, they have a general idea what the market's doing. This particular client with this particular fund decided to exit. Why did they decide to exit? Because they thought they had done pretty darn well and they wanted to get out. They didn't want to get greedy. How's the saying go? Pigs get fat, hogs get slaughtered. They did not want to get slaughtered. They were happy with what they had done in their 10-year hold process or 7 or 8 year hold. However, guess what? They missed it. They missed it. If they had known, because this is partially their box, this is where they bought, geez, they would have had an additional 38% appreciation if they had sold this year as opposed to 2 years ago. And by the way, if you didn't buy 2 years ago because you thought the world was over and values are overinflated, well, you left 38% appreciation on the table. Sorry. So, and by the way, you should still be buying. We'll talk about interest rates and the rest of that later. So supply and demand, San Bernardino County. Again, very similar charts, but again, for those of you that really want to do a deep dive, focusing on this inventory, this little valley here, which is where we are right now. This is a year ago. So expect to see a very similar valley. The question for us is going to be, when am I going to stand up here and say, month over month inventory increased? I think that's probably going to be February or March. So I don't expect to say that with the December numbers or the January numbers. So we're probably still 3 months away, maybe 4 months away before we start to see this inventory really kind of come back and impact the marketplace. We'll see. And the pending numbers are strong. Here's your 12-month chart for San Bernardino County. Not as much of an inventory loss because we were down so low. It's only almost 2%. So what do the numbers look like in San Bernardino? 4,600 houses for sale. That's 1.7% less than a year ago. Almost nothing, pretty much even. 35%, 34.7% from 2 years ago. Pretty dramatic over 2 years. Sold a little over 2,000 houses. 14% more than a year ago, 37% more than 2 years ago, and to restate what I've said, I think for the third time now, in San Bernardino County, 37% more homes sold on 34.7% fewer houses available, hence price increases. Do I sound like I'm repeating myself? I am. Okay, so I pulled out Corona. I'm not sure why. I actually put this presentation together very, very early this morning. I said, what are we going to do? We're going to do Corona. So here we are. So here's our 2-year chart with Corona. We'll leave that alone. We'll come back to what that means. Here's the 12-month chart. Yes, that's a pretty dramatic uptick in Corona. But again, kind of similar. You saw this peak here in the middle of the summer, a little bit of a pullback, but boom. Corona said, we don't need no pullback. We're marching on. In September, October, and November, that is exactly what they've done. So what does it mean for Corona? $685,500 median price in the city of Corona, a 25% increase year over year. All of the little isolated cities I've done so far, I might be wrong, but I think Corona wins the prize for year over year appreciation, 25.3%. I don't believe I've seen another city with that high of an appreciation in the last 12 months. So 12 months ago, you could have bought that same house for $547. And 2 years ago, you could have bought that house for $485. And here truly is a city that you can say had 20% appreciation last year. Oh, and guess what? We had 20% appreciation the year before that. 41.3% appreciation from November of 19 to November of 2021 in the city of Corona. So, wow, they're a shining star. Not that the other cities aren't, gosh forbid you only had a 16% appreciation. Supply and demand into Corona, again, very, very dramatic inventory decreases. So the same thing, they peaked. I'd say their inventory shortage is even maybe a little more significant than others, but the blue bar is still nice and pretty. Here's the 12-month window. So what does it mean for supply and demand? By the way, much smaller data sample, so these numbers get a little more manageable. Only 411 houses in the whole city were actually listed and available for at least one day in the month of November. It's 2.6% decrease than a year ago, 35% fewer than 2 years ago. But again, it's the same old story. Sold 216, 18% more than 12 months ago, 27% more than 2 years ago. So Corona has just crushed it. I mean, just absolutely crushed it with these numbers. So interest rates. Where are we with interest rates? I've kind of developed a trend. This was August 6th, 2.8. This comes from Freddie Mac's database, by the way. September 5th, 2.8. A month later, October, 3%. And here we are, November, last month rather, 2.9. By the way, today is December 5th, 2021. And I think that's what this is going to say. I hope, yes. Okay, so here's today, December 5th, Freddie Mac's 3.11. So have we seen an increase in interest rates? Yeah, we've seen an increase in interest rates. So everybody that I'm talking to and I trust in the interest rate world say, yeah, get used to it. A lot of stuff going on. The Fed's apparently going to accelerate their tapering of purchasing mortgage-backed securities, meaning they're going to buy less mortgage-backed securities. They've been talking about it. Now they're going to speed up buying less, if that makes sense. Bottom line is the Fed is exiting the mortgage-backed securities markets in a faster way than we had anticipated. What does that mean? That means we're going to probably see higher interest rates. So now you're looking, by the way, this is AAA gold platinum buyers with great credit, a job, income, down payment, the whole 9 yards. At least a few days ago, maybe you could have got a 3.1% 30-year fixed. All right, so those are our interest rates. What else we got? Eviction moratorium. We're not going to do the eviction moratorium here, just like for the last 4 or 5 months. Separate video. Just click the link and you'll be able to find it. Bottom line is not a lot's changed. March 31st of 2022, if you're keeping a little bit of an eye on it, that's going to really be the tell, because March 31st, 2022. We'll talk more about that on the other video. Lastly, hey, we've been talking about on this series doing the market data stuff and then doing like an interview, a person of interest, industry person, economist, whatever it happens to be. We have really struggled to get that going the last 4 or 5 months. So I am committed. We're going to start our interview series January of 2022, and my hope is to every single month within the next year is to bring you somebody that you'll find interesting, and We'll see. So at any rate, January 2022, hopefully we've got our interview series coming. And I am done. Happy holidays, Merry Christmas, Happy Hanukkah, whatever your thing is. Have a wonderful, safe holiday, and we will see you next year.